anywhere near hardball.
What is going on, everyone? Happy Hump Day, and welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts today. And today, like every day, we are coming at you live from our studio here in the heart of Las Vegas, Nevada, with our daily, only on the weekdays, live shows. Before we get to the content, quick disclaimer, nothing that's said on this channel should be taken as financial advice. So please, as always, do your own research. Speaking of content, huge day today as we are featuring the co-founder of Hedera Hashgraph, Mr. Mance Harmon, will be joining us in about 25 minutes to talk all things Hedera, what exciting things are happening in the ecosystem, some of the burning questions that you guys are wanting the answers to. Also, Polygon, will it reach new cycle highs? We'll talk about that here. But before we can, I have to introduce you to your second co-host of the day. Big Rob, what's up?
Hola! It's your boy Big Rob back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We film on location here at conventions in Las Vegas, also abroad. We do YouTube shorts, deep dives, and we do crypto street interviews, which is a growing fan favorite here with our community. So if you haven't checked out our latest one, go check that out. Also, if you guys could do us a favor, hit that like button. Let's get some make sure if you are new here, subscribe. If you don't like the content, you can always unsubscribe. That's what we say here. Yeah, it's like a 7-day trial. And then real quick, let's just get right into the roll call. So first in the chat today, Jimmy. Round of applause for Jimmy. We also got Armzilla. Hola! New up in here. Welcome to Sin City Crypto. Broke Yoshi, While You Loud, Vegas Free Baller, Hit or Miss Crick Cats. We got Moby Sage, Noel, Lala, Giovanni V. Hola! And then we got West, Moby, Big Chili Willie, Luis, Stereo 2, Crypto 420, Fino, Jay Delano, and then we got Leakbit, hola! And also DFib. Oh, DFib up in here.
DFib?
My boy DFib is back. What's up, DFib? And then we got Nate Williams as well. Hola, welcome to Sin City Crypto. And yeah. If you're new here, say what's up. We'll when we get time in between segments, we will acknowledge you. Say hello. Welcome you to the community.
Robin, why don't you introduce our third co-host of the day?
Well, we got a third co-host.
We got a third co-host.
We always got all kinds of people up in here.
Man, I love this community.
We got your boy Seth. Mind your biz. All right. Guest appearance. If you're not familiar with Seth, make sure you go check him out. You can also do a test trial on Seth here.
Do you haven't watched this, Seth? Do you do test runs?
I do test runs, but only when I'm in Las Vegas.
My man.
Don't tell anyone.
Fair enough. Right. So Seth is here. He was here for Litecoin Summit and also Money 2020. And so which conference did you enjoy the most?
Is it fair for me to say Coin Agenda, which was sandwiched in between there? We actually had 3 conferences this weekend in Las Vegas. There was so much social and professional gravity. I couldn't stay away. And of course, when I was in town, we connected. And when you guys sent the invite, of course, I couldn't turn it down. So here we are. But I did enjoy Coin Agenda a lot. They had a phenomenal meet and greet. No other conference has quite the same caliber of investor, we'll say.
Here's the problem, though. That wasn't an option.
What?
Yeah, I didn't remember. I said I don't think I put Coin Agenda as an option to pick from.
he went with C other and then wrote in an answer. So
write your own answer here. Rob, what did you? So we didn't go to Coin Agenda. We went to Money 20. What was your biggest takeaway from Money 2020?
You know, the fact that it is traditional finance, Money 2020. Obviously, it revolves around money. Which, if you've talked to any haters when it comes to cryptocurrency, they always say, what is it? It's not a money. It's not a currency. You can't go buy groceries with it. And lo and behold, at the Money Conference, you had a big presence when it came to cryptocurrency. Particularly, there was a strong sector there for crypto was payments. You had Ripple Labs there, which is a remittance payments, cross-border banking. And then you also had a lot of stable coins. We saw Paxos, Circle.
We actually sat down and did a 15-minute interview with the CMO of Chainalysis. It came out to be really good. We'll probably post that in the next couple of days. Came out to be a really good interview. So
Yeah, we had a couple other ones as well. So we'll probably put together some content of our time there. Those always tend to be pretty fun montages. So
Paxos was pretty fun too. So. All right.
Yeah, Bitcoin's 20K, still over. Still over 20K.
You're funny on Ben's channel this morning. Like, Bill Market's back. Was that today? No, that was yesterday. That was yesterday. All right. Speaking of markets, let's take a peek here. Coin market cap coming in just a smidge under $1 trillion, 999 billion. 24-hour volume shot up to 118 billion, up from 45 billion yesterday. So we see a nice little, what is that, a 3x on the volume? Bitcoin dominance creeping up to close to 40%, and ETH dominance sitting at 19%. You have Bitcoin coming in at $20,722. Over the last 7 days, it is up 8.15%. ETH, 1550, up almost 20% in the last 7 days. If we swap over to the ETH chart here, we've been talking about, I don't have the pattern drawn on here, but there was a massive bull flag pattern that is broken out of. Beautiful volume. You see, this is on the 4-hour chart. Nice big green candles. We did draw, got a couple of red ones mixed in there, but the next level of resistance we're looking at is the $1,639 resistance level. If you blow past that, we're looking at 1787, and then on our way to 20K. If I hide the drawings here and I throw on our Ichimoku cloud, which is what I use to figure out whether the trend is strong, where it's going, and we can kind of take a look. This is beautiful. I mean, you have all 5 indicators, all 5. I call them checklists, right? You have a lot of advertisements as well. You have the green cloud, which is great. You have the conversion line over the baseline, which is bullish as well. And then finally, the lagging indicator is trading above price, bullish for Matic moving forward as far as trend. If I swap over to the 1 day, we got almost everything. Okay, we have the conversion line over the baseline just crossed. We also have the lagging indicator above price. The only thing we need is for this cloud to flip green. And you can see we are currently trading inside the cloud. This does act as support and resistance. You can see back here in September, middle of September, perfect. I mean, it doesn't get any more perfect than this. Literally at the top of the cloud, we found resistance, came back down below the cloud. Now we are in it again. We wicked up to the top part of this, top band of this cloud, which was right at $1,633. We did wick down, but it's still early. What we want to do is we want to see a breakout above the cloud for us to be like, all right, ETH probably going to 1,700, and then you have XRP coming in at 46 cents, kind of stagnant, only up 1%, and then Cardano up 13%, sitting right at 40 cents. Seth, are you more of what are your thoughts on Cardano?
Oh my gosh. Okay, so as far as my thoughts on Cardano versus other smart contract ecosystems, I think it's not even a function of opinion to just say there's a lot more going on by way of DeFi in the Ethereum and also the Polygon ecosystem as a dedicated sidechain scaling solution to Ethereum. You just have so much more velocity, so much more volume going through those ecosystems. It's not to say that Cardano doesn't have that potential future ahead of it where there is more utilization, but right now it's so much harder to see until you see that level of adoption and real world usage, right? DeFi is synonymous with Ethereum right now, and Cardano's got a lot of work ahead of it to make that change. So that's kind of like, I'm more of a fundamentals guy though, right? So like that's where I go with it. Price, maybe we get a chance to buy cheap still, but they've got to prove a lot.
Since we're going to be doing some obvious covering of Hedera, how's the token price?
H-bar, so I'm going to swap over to the crypto bubble. So on the daily, H-bar is down 1.1%. And I'll click on it here. 1.38 billion market cap, 40 million in volume over the last 24 hours. Currently ranked number 39. It's been down over the last day, last week. It is up 2.6% over the month, but yearly down 85.6%. Some of the biggest gainers of the day, you have Toncoin, which is the Telegram coin, which I'm still not sure what purpose that serves. Do any of you know Toncoin?
Shameless money grab.
Yeah.
I mean, that's the only purpose. Yeah. I mean, like otherwise, you've got the Telegram ecosystem that was self-funded, bootstrapped by a Russian multimillionaire, right? So did they really need to do this? there's no outward indication that they absolutely had to raise funds this way. So, what future development is it going to fund? Who knows? Totally unclear.
Yeah, I wish I wish they would have taken the same path that you saw Twitter go through, where, hey, they're embracing crypto, they're integrating crypto in the form of a wallet, also bringing in NFTs and smart contract functionality into the platform via, a layer 1 blockchain. But here's the thing. Why wouldn't they do that with Telegram? It seems like an easy plugin. There's no, I say, why would they do it? Obviously, money is probably the motivation when it comes to it.
That's a good assumption, Robin.
You could sit here and hide behind a mask of, hey, this is going to be utility for Telegram. But realistically, how much better is a standalone token going to make a social platform or communications platform better? And I would like to see perhaps if you're going to go this route, to give an in-depth roadmap, tell your customers and consumers hey, this is what to expect from our token. This is some of the things that we have in mind, and this is how our project will become better, more valuable when leveraged with our own token. And it seems as though, unless I missed it, there's a lack of that direction. And so for that, I'm kind of questioning, what are the motives? And so,
you think everything's a cash grab. So I'm, I laugh now, but I guess you can argue most of them are, yeah.
No. When you look at the numbers, there are thousands of cryptocurrencies, and I think we're all in agreement here that you don't need thousands. You probably only need at the end of the day, 20 to 100, I guess. I don't know what the number would fall into. It just depends on, certain projects will fall into certain niches. Obviously Bitcoin works great as a store of value. Some people think that it can scale in the form of a layer 2. We see the popularities of smart contracts, DeFi. So, how many projects need to be in the crypto space? That's up for debate. But we do understand that there is a saturation and that there's no shortage of companies trying to make a quick buck. And so is that the premise of Telegram? It seems to be that kind of narrative just from the optics. But I haven't done an extensive deep dive on it. I have looked into it, but right off of the bat, I haven't nothing's glaring standing out saying, hey, we're going to improve the platform by releasing the Toncoin. So
fair enough. All right. I want to move on to the Fear and Greed Index coming in at 33. So not extreme fear anymore, just regular fear. Yesterday was 20, and last month it was 21. So people are less fearful, which is good. And then just taking a peek at the traditional stock market, you have the Dow Jones flat, S&P kind of flat, down almost 0.5%. NASDAQ down almost 2%. We saw a big rally in NASDAQ yesterday. But the VIX is down, which is the volatility index. So that's kind of why you see a lot of prices.
Are you surprised that Bitcoin did not follow on the NASDAQ in a decline? Because if it were to follow the latest trend, if you would have got a over 1% red day on NASDAQ, right. Especially after a big pump, you would expect perhaps a big pullback. Kind of surprised to see that Bitcoin's still over $20,000.
Yeah,
not shocked. Obviously these are two different asset classes. They just have a correlation.
It did see a little bit. Did see a little bit of a dip down to 20,500, but nothing. Nothing substantial. We talk about a $200 dip in Bitcoin. That's nothing. So.
My question is that so going back to, I think it was August 28th, I think it was when we got into the $20,000 range. We had only broken out or above the 20K range, so for over the 2 months. But I think it was twice for any significant period of time. And so are we gonna flip over the 20K mark? Because you do have the midterms coming up, and there's been a lot of talk of having a rally during these coming weeks. And so, we're less than, what is it, like 3 weeks away from the elections, right? Yeah. 2 weeks, something like that?
Something like that.
Yeah.
All right.
Is it the 8th of November? Is that when it is?
I believe so.
Yeah. So
The 8th? Yeah, the 8th. I think you're right. Yeah. Before we bring on Mance Harmon, which, by the way, if you're from the Hedera HBAR community, say hello. Also, if it's your first time here,
we
say hello.
Here we got a couple people. We have Chris Maddox, we got Ben and Jerry's, we got
I love Ben and Jerry's.
Proudy Woody, Sneaky Easy, and then there's a couple other people in here. Zero Say, hola, and Bobcat, hola, welcome to Sin City Crypto.
And
Zero
Chili
Say, he says, HBAR co-founder on 4K sub channel.
Chili Willy drop a $5.
And Big Chili Willy dropping a.
Oh, that's what that comment meant. Like, we're 4,000 subscribers. How do we get them? It's because we do not stop. We don't take no for an answer.
Yeah.
We are vigilant. And if you haven't seen our production, you'll understand why. Stick around.
You know, at the end of the day, you know, there's a lot of creators out there that have big numbers that might not bring the heat. You know what I'm saying?
Boys of Sin City Crypto, we bring the heat. All right. So we briefly covered this yesterday, but it would do a disservice to everyone if I didn't bring this up again and get Seth's opinion. So this whole mining thing, right? Hash rates at all-time highs, difficulties at all-time highs. Energy prices are also not at all-time highs, but they're pretty high. But here was some, at least I thought it was a decent piece of news. And Seth, I'm curious to get your opinion.
Okay.
Distressed Bitcoin mining assets become popular investment. A growing cohort of investors are pooling capital with the intent of lending to or investing in distressed mining teams. Some miners are selling hardware to strengthen their balance sheets. And also Peter Thiel, which is the co-founder of PayPal, also recently led a $3.7 million seed round for Block Green, which is a new lending protocol that targets miners. Are you concerned at all about where mining is, where it's headed, if these energy prices don't come down, if Bitcoin continues to stay under 20K, or even worse, go down to like 12, 15K? What's your overall sentiment on the mining market, the industry right now?
Yeah, so I appreciate that you asked me that. What I'll say is that Gareth Soloway, who is a phenomenal chartist, right, phenomenal technician, he started to change his predictions for Bitcoin's local bottom for its upcoming bottom support in this current bear market. Okay. After I started getting really loud about my predictions for what the bear cost to produce one full Bitcoin was. Now that
Talk to us about it.
That wasn't lost on me at all. So we're looking at anywhere between 12.5 to 14.5K as the bear cost to produce one full Bitcoin if you're at the average rate of power which is most typically used for mining across the entire globe. So I actually don't foresee there being a massive problem for those mining operations that have their costs properly, properly squared away. Unless you're vastly overpaying for power at a mining operation at scale, you're probably going to be okay this bear market. You're probably going to be able to make it. Now, it's going to be very lean margins when you get to that point, but you're probably going to be just fine. And so some of these products that are popping up, some of these investors that are coming in to try to buy the weakness that's being sold by these mining operations, it's a very smart move, and this has been done in previous bear markets. I personally have done it as well, buying up infrastructure when you got the fire sale pricing of the hardware itself. And it just makes sense. If during a bull market you're selling picks and shovels, right? Like boom and bust cycles, you're selling picks and shovels to those who want to go excavate the gold, so to speak. Then during the bear market, you want to try to acquire all of those goods at the cheapest rate possible, right? This is just solid business, right?
Right.
You buy the bottom, you sell the top, if you can, right? Now, seeing some of these groups come in and say, like, oh, no, we want to try to like service these distressed miners, et cetera, it's a very smart move. I don't know if it's going to play out the same way that it has in previous bear cycles. This one is genuinely different, and I know we've heard that a couple of times, but this bear market is genuinely different. And some of these mining operations, if they have all of their books in order, if they've been running the correct way, they're probably not going to need some of the assistance that some of these groups are coming in to try to offer, because they'll understand that, like, well, it may not be toxic or whatever, but it is somewhat predatory, right? To be like, okay, well, these guys are they're trying to buy up the means of production while it's cheap,
right?
So I think we're going to find that some of these initiatives that they're met with a mixed response, because miners that are alive and in operation today, they're the smartest miners that have ever existed in crypto. Period. And the ones that are not in operation today, well, they made their mistakes already, right, and they're already out. They already had to fold. So I think it's going to be this is going to be not quite the way that some of these investors expect it to go. They're not necessarily going to be able to just swoop in and buy up all of these distressed assets and these distressed mining operations. I think that'll be their best effort, their best intention, but it's not going to pan out exactly the way that they think so. Because miners, especially miners that have been watching my content over the last year, they were better prepared than this, right? They've already been prepared to weather this storm, and they've been looking at that target of about 12.5 to 14K to mine one full Bitcoin as their target for profitability. And if they've been using any other measure for Bitcoin as their profitability, well, then yeah, they're not going to make it.
Here's the thing though, that 12.5 to 14K, is that with what's like is that with the newest model of ASIC? Is that with like,
Or is that the average price?
yeah, or it's like if it gets to 12.5 and you don't have the very latest model, you're SOL.
Well, you got a couple variables, right? So you got the efficiencies of the newest miners. You've also got the old models of miners that if you just bring your cost for power down, you're back in that range for mining one full Bitcoin, right? So you can manipulate either one of those variables and you're back in that range, right? In the same way that if you're running a business, you can either mark up your goods on the retail side or even on the wholesale side, or you can just try to acquire what you need for your business at a lower rate. So you can do the same with mining. But you just have to be able to work those two variables: efficiency versus your cost of power.
My concern when it comes to miners, more or less the publicly traded, the big players in the space, is that we saw no shortage of articles or basically press releases from these miners saying that, hey, we're going to be buying X amount of ASICs this year or in the next 6 months. Our hash rate is increased by this much. We have this much more mining power. And so it brings me to the conclusion that, perhaps some of these people leverage debt, and how much debt did they leverage? That's my question. And so I think that, well, for one, let me say that the Bitcoin network will be fine. It's self-amending. As the hash rate moves, it naturally moves to different places that have cheaper energy, things of that nature. And so it's like, for me, it's like, how many miners are going to go under? Because I think there's going to be some. Will it be just one? Will it be 2 or 3? Because if we stay under, say, 20,000 and you have multiple mining operations that are working with a ton of interest payments where they bought mining equipment, they bought ASICs during the bear market where the supply chains were already inflating prices, computer chips, the prices of those were soaring, and there was a supply shock when it came to the ASICs themselves. And so did companies overpay? Are they paying back those loans now in the form of interest? And are the profit margins so thin that they're just trying to get by? And what happens if we go through a bear market in this price range until 2024?
Yes, no, and yes. Sorry. I'm just going to cut to the chase.
So, yeah, man, it's for me, you'd be foolish not to think that somebody might be underwater.
No,
and some big player might be underwater, and the Bitcoin network will be fine. But
you had Compute North declare bankruptcy, and we know Marathon had a pretty big, I don't know if it was a stake in it, but they had some money tied up. I think it was 30 or 40 million.
Yeah.
What kind of ripple effects have we seen, or are we going to see with Compute North, which I believe was the largest data servicing or data, right? Why, Seth?
Mm-hmm. Yeah, so I mean, as far as the ripple effects we're going to see, let me jump back a little bit and go back to the fundamental, like the basis of this conversation, right? At this point, when you're asking, okay, how many of these groups were leveraging debt? Like, how many of them were using some of their mining profits to then take out collateralized loans from some of these centralized services, right? Like, Three Arrows Capital, Celsius, some of these other groups that have very clearly been allowing for this toxic debt. The toxic crap debt to roll downhill. A lot of them did get caught up in that, and Compass Mining was another one you didn't mention. They absolutely got caught up in having their books not fully balanced, and they absolutely took a hit from that as well. I talked to somebody at over at Money 2020 who said, yeah, unfortunately, I have some miners that are hosted with Compass, and I'm never going to get my hands on. Right, so you've got a lot of people who are unfortunately they're illiquid, right? Both with their crypto assets and then with the means of production. So yeah, you do have a lot of people who've been caught up in these in this push to expand hardware operations by leveraging their crypto profits And yeah, they're stuck, unfortunately. They're absolutely stuck. So you're right. We haven't fully measured the extent of how bad that problem is. So yeah, it's hard to say how many groups are going to come out the other end and just be
here's
wrecked.
the thing. So if someone goes under, which, you know, it's still not a foregone conclusion, but say if some large mining company goes under, publicly traded one, they're just going to get absorbed by another one. You know, they're going to liquidate their ASICs. They're going to sell them at a rebate. And then who's going to pick them up? It's going to be the competition. And so, you know, you're going to see the big players, the powers that be, get a little bigger if that does play out. So,
yeah, well, I mean, then there are only so many that are interested in that business model. So as far as there being any kind of like declaring bankruptcy, depending on how they structure the liquidation of those assets, it can just play out very differently for every single one of those players that does have to fold. So we'll see. And in some cases, because there are fiduciaries that own the hardware, right? In some cases, such as Compass, right, where you have people who are paying for hosted mining, there is like that structured, the way that settlement takes place, or the way that liquidation takes place, could be very different because they have these folks who have paid for the rack space who need to be made whole first. So you might not be able to get a third party coming in and saying like, oh yeah, well, we're going to bail you out to the tune of $50 million. So all your assets are ours now. It might look very different in that they require making those individual buyers whole who maybe only have like 2 or 3 ASICs that are being hosted by Compass Mining.
Yeah. My last concern, just to harp on here, is that the barrier for entry is getting harder and harder to get into for mining Bitcoin. You know, with the hash rate going up, the difficulty going up, and the price of Bitcoin dropping, or profitability of it. So, I don't know.
All right. Well, before I do this, if you know someone who is a Hedera hashgraph fan or is just a crypto fan, go ahead and share this live stream with them, because we are now going to be bringing on the co-founder and CEO of Swirled Labs, Mr. Mance Harmon. Let's go ahead and bring him on, Rocco. Mance, how you doing, sir?
Hi, guys. I'm well, thank you. How are you?
I'm great, thank you. My name is David. The other gentleman
Robin.
with a hat is Robin. We know you're a busy man. We just want to thank you so much for taking the time out of your busy day to come educate us and our community about the amazing things that Hedera Hashgraph is doing. So I would just like to start it off and just ask you to tell us a little bit about maybe your story, how you got into crypto, what inspired you to get into Hedera Hashgraph and co-found the project with Dr. Baird.
Yeah. Well, so if we go back to the beginning, Lehman and I have been working together for almost 30 years now, since '93. And in 2012, Lehman decided he wanted to solve a hard math problem, specifically how to maximize security and performance in a consensus algorithm simultaneously. And he worked for 3 years on that. And in 2015, he sort of cracked the nut, so to speak. He invented what today we call hashgraph. Through that time period, 2012 to 2015, Bitcoin really made the market, obviously, for distributed consensus. And we recognized the value of hashgraph and what Lehman had invented. And it just, it was a no-brainer. With what we have in hashgraph, we had to bring it to market, had to introduce it to the community. And that kicked off a whole trajectory, that we're on today. First with Swirls, which started in 2015, and then with Hedera Hashgraph that we started in 2017.
Amazing. Now, you mentioned Hashgraph, and we know that's a patent-protected technology. What makes the Hashgraph consensus much more superior than any other consensus that's currently out there in blockchain?
Yeah, actually, I want to correct that one statement. It used to be patent protected.
My apologies.
It's now open source. Yeah, the whole project is open source.
Amazing.
That happened here. Yeah, just a word on that. We knew that we needed to solve some of the problems that existed in 2017. If you'll remember way back then, Ethereum and all the other major networks were forking repeatedly. And it prevented real projects from wanting to adopt the use of those platforms. Because if you're a land registry and you're sitting on top of one of these layer ones, and then the platform forks, now you have two different networks with copies of your land registry, and your software, your client software, is connecting to the same computers. It just happens to be that some of those computers are now in a different network.
Right.
It created chaos. So anyway, we started proprietary, patented. Hashgraph's now been open sourced. If anyone goes to the GitHub repositories and looks at it, they'll see that it's Apache 2.0. So we're past that problem at this point. I'm sorry, what was the original question?
No worries. What makes the hashgraph consensus so much more superior than anything that's out there currently?
Yeah, so the problem that Lehman solved, it's always been the case that the industry, say always, for 30 years, people have known what the limits are in terms of security that can be achieved. It's something called asynchronous Byzantine fault tolerance. There are a lot of BFT algorithms out there, but they aren't asynchronous. So why does that matter? It matters when you have to deal with real-world threats like distributed denial of service attacks, right? If you're just BFT, then you've got a problem in that you're still vulnerable to various types of attacks that ABFT, asynchronous BFT, is not. The problem has been that no one knew how to scale networks that were also asynchronous BFT. That is what Lehman decided he needed to solve, and that's what he solved in Hashgraph. So Hashgraph is uniquely in the market able to scale to hundreds or thousands of nodes and tens of thousands and hundreds of thousands and millions of transactions per second through sharding, while at the same time maintaining the ABFT property, which makes it fundamentally more secure than anything else that's not ABFT. That matters. That matters if you're building real-world, enterprise-grade, mission-critical applications. It's just all important when you start thinking about the value of the platforms and transactions that are being built on any of these layer one protocols.
Okay. Now here's my next question. Now, what is Hedera doing that's unique and moving the overall blockchain industry forward? Right, because we have a long way to go. It's still pretty new. Smart contracts only came in, what, 3 years ago, 4 years ago? So, like, how is Hedera? What role are you guys playing in moving the industry forward as a whole?
And then also, you mentioned smart contracts. If you pull up your the Hedera website, right there, top front and center is the smart contracts 2.0. So I know that's probably something you guys are really excited about as well.
Sure. Well, so in terms of what we're doing to move the market forward, first off, we have focused on large-scale, enterprise-grade or large consumer-grade applications from the very beginning. When we started all of this, we knew that we needed to be able to handle massive volumes of transactions if it was going to be the case at all that this tech was going to go mainstream. So there are two halves, two parts to the answer. One is the technology fundamentally does help move the industry forward because we can securely address massive use cases that others are going to have difficulty doing. So there's the tech side of this. And then in addition to that, we've always believed from the very beginning that ultimately the governance of these networks are going to be as important, if not more important, than the tech itself. So what we did was create a governing council that doesn't look like any other governance model in the market today. And it's based off the original Visa model of governance going way back to the 1960s. There's actually a guy named D. Hawk, who is the founder of what we call Visa today. It was Bank Americard back then. And D wrote a book about the model, the governance model that he created back in the 60s that made it possible for all these different organizations that are competitive with one another to work together to bring to market what is this today, Visa. We adopted basically that model with modifications for where we are. And what it looks like is a council of global organizations that are highly respected in the market today that not only run the nodes in this initial shard of the network, if you will, the initial part of the network, they run the nodes, but they manage and govern the platform in total. So if you're a business that wants to use a layer 1 protocol, you're going to build your solution on top of it. You depend on. You want to know who is making the decisions for the long-term management of that platform. And we do it by committee. So today there are 27 organizations of this caliber that I'm describing. There's Google's and IBM's and Boeing's and Deutsche Telekom and Mora and that caliber of organization, and they govern by committee. And there's a legal and regulatory committee, a technical steering committee, a membership committee, a corporate utilization committee, where people get together and exchange notes about how to build their solutions. That model, I think, ultimately is really important for trust and global adoption. And the two together, the tech and the governance model, are unique in the industry.
All right, and then Mance, we also have Seth from Mind Your Biz. He's got a pretty big YouTube channel in the Bitcoin mining. He used to be a software engineer for Microsoft and Google, and I know he had a question for you as well.
Well, I appreciate that. Let me just set the record straight there. I was a senior national trainer. I have never touched a single line of Microsoft's code,
Gosh,
and I'm actually a pretty big open source advocate at this point since I've reformed. those days are long past.
Fair enough.
But yeah, the question that I have for you, Mance, great to meet you. And the question is, this is a common criticism, right, in the blockchain ecosystem for most entrants. That is that some would claim that Hedera is more centralized than its competitors.
Sure. Well, look, thank you for the question. I always welcome this question because I think it really matters how you define centralization, and most people don't. So let's define it, right? There are two ways that you can sort of define centralization in my mind. One is the nodes that are operating the network, the players, the participants that operate the network, how much weight do they have when ordering transactions as they flow into the network, right? Is it fair, or is it going to be the case that a small number of participants have, the majority of the hash rate or the majority of the stake, talk about proof of stake, enough such that they can effectively influence or, in the worst case, dictate the order of transactions? That's a fair definition, right? That's one definition. Mm-hmm. And what I would argue is that we're more decentralized in that regard than all the major proof of stake and proof of work blockchains are today. We have 27 council members, each of which has equal vote in the ordering of transactions. If you compare that to a handful of miners in a proof of stake network or a proof of work network, or say two addresses that hold 46 or 47% of the stake in Ethereum in a proof of stake network, those are far more centralized than we are today, if that is the definition. There's another definition, and that is who is making the decisions about the governance of the network. Like, it's governance and it's tech, right? If you have a handful of developers in a foundation that are deciding effectively what goes into a baseline, that's more centralized than a community that is contributing proposals and then a council today of 27 that end up determining the product order, the feature order of the baseline. So it really just depends on what the definition is. I think by any reasonable definition of centralization or decentralization, we've designed this to be one of the most decentralized, if not the most decentralized layer 1 in the market today. And I think practically it really is if you use those measures.
I think what a lot of people, what their concern is, the whole idea of crypto and the ethos is, traditional, these big traditional enterprises, big banks, we want to separate away from them. And so when they look at those 27 nodes and you have names like Boeing and all the ones you mentioned, people think that, oh no, now it's these people that are controlling the whole network. which from everything you described is not true. So I think it's just a misconception, right?
Another thing I would add to that is I don't trust Boeing, right? And I don't trust Google, and I don't trust, you choose one of our council members. We don't trust any of them individually, right? That's the whole point. It's the collection, it's the aggregation of the community of the council members that have there, and many of them are competitors, right? Collectively, they provide the balances that are needed to have the fair governance.
Fair enough.
I think you can also get a lot of people that are extremely passionate about their own favorite blockchain, and I think that they immediately try to find anything and everything they can to poke at when it comes to competition. And so I think that is more or less what it is. People haven't really sat down and done the research, which is a shame because it's you guys are doing a lot of fun stuff there.
Speaking of competition, man, so what project or company would you say is the biggest competitor to Hedera, and maybe expand on why you feel that way?
It really depends on what vertical or use case that we're talking about. All right. We're a general purpose platform. We haven't done what some of the other networks have done, and that is focus in on a single use case category, whether it be DeFi or NFT or you name it. So we don't do that. We haven't done that. The reason we haven't done that is because the council members themselves have been chosen to the entire universe. Not that we have just tech giants or just banks or what have you. We have retail, we have payments, FIS WorldPay is a council member, we have law firms, we have banks, etc. We have it all. And we're focused on enterprise and large consumer. So if you start thinking about who the competition is necessarily, then you would have to think about specific use case verticals that the different L1s focus on, and then you might say that we compete with those L1s in those use case verticals. It's more pronounced in sort of Web 3.0, right? If you're thinking about Web 3.0 and crypto native applications, there's another distinction to be made. Crypto native use cases versus Web 2.0 use cases migrating to Web 3. So it's hard to answer that question without looking at the pie and seeing what the different slices are and who the participants are in each slice.
Fair enough. Now, sticking on the world of traditional business and enterprise, are there any problems in that world, traditional business, finance, enterprise, that Hedera is addressing or looking to make better? Is there one thing you can pinpoint that these companies have an issue with, that Hedera is coming in and saying, hey guys, we can fix this?
Well, I can tell you what we're interested in. There are several. There are a lot of things we're interested in. But ESG is one of those. And specifically the environmental, the E, well, we cover environmental, social, and governance. We have elements of all three that we are contributing to solving with big enterprise and even outside of big enterprise, small and medium businesses as well. Because hashgraph works the way that it does, it's incredibly efficient, which makes it fast and also low cost. I mean, the two go hand in hand. If you can have really high throughput on a transaction basis for a given unit of energy, then the cost per transaction and energy usage per transaction necessarily goes down. It's really tiny. So it turns out that hashgraph as an algorithm is the most efficient algorithm in the market today with respect to energy usage and also cost. Now, the network, Hedera, the implementation of hashgraph bears that out. And one of our council members, University College of London, did a study where they wanted to look at the leading layer one proof of stake networks and compare them on energy consumption and efficiency. And they publish this. Anyone can go and look it up. And it turns out we're far more efficient than the other layer ones. But more than that, we're far more efficient than Visa, the network. For every time you swipe your Visa card, you can do 70 transactions on the Hedera network for the same amount of energy consumption. So that's an area where I think that we can really contribute. The reason that enterprises and businesses more generally are going to care on an increasing basis, the universe has already woken up to the fact that we need to be good stewards of our resources on a planet-wide scale. Separate from that, the regulators are getting involved. And there have recently been rules changes at the SEC that, if approved, will require the enterprises that are publicly reporting their information to not only say what their energy footprint is, their carbon footprint is with respect to their products and services, but they have to account for the supply chain of vendors that they use to build those products and services. Well, that matters if you're building something on top of a layer one. If you've got to report your carbon footprint and you're using a proof of work network, it looks terrible. Your footprint's going to be enormous. If you're using a proof of stake network, then we're the most efficient.
So with everything you said about hashgraph, do you envision more of, maybe it's something where a proof of work or a proof of stake or a proof of authority network decides to swap over to a hashgraph mechanism or fork or new projects that come in? Do you see hashgraph being used more moving forward because of everything you just explained?
I certainly hope so. I think it will be the case. The reason that we open source the code is because I think that hashgraph is the best algorithm. Technically, objectively, you get any computer scientists in a room together that are experts in this industry and they know what they're talking about. They look at the proofs that we've created to prove that the algorithm is what we claim it is. There's only one answer. It is the best tech in the market. And so by open sourcing this, we make it possible for other projects to use it. That results in huge gains in terms of efficiencies in exchanging, the ability to move tokens from one project to another project using the same hashgraph technology with state proofs. It makes a huge difference to the community, to the industry at large in terms of security and efficiencies and performance. I would expect it happens, and we certainly want to push that.
And you also mentioned Visa and how it's a lot more efficient as far as energy consumption. Do you think that this technology will be so disruptive that perhaps it leads those transactions? Because in the past, Visa didn't account for all the transactions in the world, and going back to the 70s and 80s, and now they're the dominant form of payment. Do you think that maybe even just crypto in general, do you think that the old business model that is Visa, these traditional terminals, do you think that's going to fall by the wayside to projects like your own and other remittance payments systems?
Well, using this as payment rails, using distributed ledger technology as payment rails, I think it absolutely is going to be on the upswing. How long it will take to really displace existing payment rails, it could take a long time. It could take decades. Visa got started in the 60s. They give you a sense, right? Here we are 60 years later, and Visa is what it is today. But there's huge value and utility in decentralized models, especially related to payment rails. Governments are going to be creating CBDCs. The future is distributed, and it's difficult to know all the use cases that are going to emerge that are going to really grow and accelerate adoption of the technology. I think back to the 90s when I was first trying to explain the World Wide Web to my parents. It was difficult for them to really appreciate it until they started using email, and then they got a web browser. It was Mozilla first, and then Netscape, followed by Internet Explorer with Microsoft. We're in a similar place, right? We have fantastic tech. I would say that cryptocurrency was sort of the initial use case, but really small percentage of the population used it. Then NFTs, in the way that we've seen them used in the past couple of years, that really was the use case that it broadened the number of users, brought a lot of users into the crypto community. I think that the move from those early use cases to more sophisticated use cases that result in really dramatic improvements in loyalty rewards programs, for example, making it possible for all the different retail brands out there to interface with their ultimate end user, the consumers of their products and services, in a fundamentally different way than they do today. You know, not just through the tools that they have today, but through tools that are augmented with the Web 3.0 technology and context. That's when the average person begins to get exposed to crypto or distributed ledger technology in a fundamentally different way than what we've had so far. So I think it's going to be fascinating to see how it all unfolds, but I do think that crypto is going to be a core part of the global infrastructure that's going to touch every part of our lives.
Brilliant. So you mentioned as far as crypto touching every part of the retail and consumer participants' life, I think the question a lot of people have, especially with the upcoming or the more recent announcements from the U.S. administration, the presidential administration, with their call to do more research and find out more of these use cases. In what capacity do you see Hedera contributing to something like a CBDC?
Yeah. Well, there's a distinction between Hedera and hashgraph, first off.
Okay.
Right? Any CBDC should really be concerned about the security of the underlying consensus algorithm, right? I mean, that should be priority number one if you're going to have it distributed at all. And there is a debate whether a central bank currency should be distributed or just run on a database, if it's the central bank that is running everything, right? In our case, with the Fed, you know, there's a good argument that it should be decentralized. Each of the banks could be running a node, if you will, that provides the security and trust that is better in some ways than just having a database. That's one. So then separate from that is how do you interface? And what I would say is that it won't be, I at least anticipate, that it will be that central banks are going direct to retail users or even the retail banks necessarily with their digital currency. There's another big debate going on about whether that's a good idea or a bad idea. But I think that there will be a central digital currency, and then there will be layers in the financial infrastructure that reach down to the average retail user, and that's where Hedera plays a role. Hedera can play a role in the layers between the retail user and the digital currency itself as issued by the central government.
Okay. Well, I know there's not a lot of people who are fans of CBDCs in our industry, right? The crypto industry as a whole.
Right.
So, you know, people are worried about privacy. You know, the central bank essentially can just go into your account at any time. But, you know, we talk about this all the time. It's out of our control and it's coming. So we just hope it gets built in the right way, and you know, we're happy at least a project of your stature is going to have a hand in it. Mance, what are you most excited about with Hedera moving forward? Are there any exciting partnerships or upgrades upcoming in the ecosystem that you can share with us?
Yeah. Well, so first off, we just turned on staking a week ago, so that's a big change. It's a long time coming. And those that now hold HBAR can go and stake them. So we're glad to have that box checked, have that. What I find most exciting about the project today is this new committee that we have. It's the Corporate Utilization Committee. And it's comprised of council members, but ultimately will include non-council members well. And these organizations are getting together to figure out, for their solutions that they are building, if you were to take each one of them and sort of decompose them or deconstruct them into their component parts, and then you look at the components across all of those different solutions that have a range of use cases, where are their commonalities? What components are common across multiple solutions? And once you've identified those, then you can standardize those, build software, open source software for each one of those component parts, and then for anyone in the community that comes next that wants to build a solution, just make it up. Let's say they want to build a stablecoin. Rather than starting from first principles right on top of the layer one and it taking 3 or 4 months to put together a full stablecoin solution, they can use these, what we call accelerators, these accelerator components. And instead of it taking 4 months, they can do it in a week and a half, right? That dramatically accelerates the time needed to build a solution and go to market. Now, as a result of all of this and the work that's being done in that committee, what we've seen is just a huge increase in the number of large-scale consumer and enterprise interest in use cases that want to be a part of it and want to talk about it. And so just the traction that we're getting, and frankly, it's happened since the crypto winter started, which is fascinating, right? Crypto winter started really, back in the spring or early summer. And since then, the Corporate Utilization Committee has been formed, and we've seen this kind of traction and growth in really good use cases that we hadn't seen in the same way before.
Mance, if it's okay with you, obviously Hedera's got a very vibrant, live, and loud community. And we're sitting here watching our chat, and we're getting a lot of questions about tokenomics, the release schedule. Apparently, there's worry. People are worried that there's going to be tons of tokens flooding the market. I'll just leave it general. If there's anything you want to touch on that, speak to the Hedera community if you'd like.
Yeah. Well, first off, there is this published schedule, if I'm not mistaken. I know there's a published schedule. What I don't know, to be fair about it, is when the last time it was updated. I know that there was an update that was coming this summer in the past few months. I just haven't looked to see if the update has been published. But if it's old, there's an update that is coming. Number one, so people should go there to look at the proposed schedule. I think the information is fresh. Number two, there is a council that is making the decisions about such things as usage of tokens, for what purposes they get used, and at what rate they get used. And they're not stupid. They're not stupid people. And so this is part of the reason that we created the council, is because we wanted to be able to pull expertise from these world-class organizations and have them contribute directly, as opposed to getting a board of advisors, for example, with the same type of information. And they have oversight. There's a treasury committee, or I should say CoinCom, that's what it's called. The coin committee that manages treasury and usage of tokens. I personally am not worried about the kinds of things that probably what the viewers are talking about. If you look at where we've come from compared to where we are today in terms of the tokens that had to be released early on, and most all of that, not all of it, but most all of that is now behind us. The token economics look much better today than they did 3 years ago. So it's just not something that I'm not trying to minimize the concern, right? It's a reasonable question to be asking. It's a correct question to be asking. It's not something that keeps me awake.
Fair enough. I want to pivot to, well, by the way, thank you so much again for taking the time to hang out with us today. I just have one or two more questions, Mance, and then we'll let you go. We know you're an extremely busy man. First question, do you own a Lamborghini?
You know what? I drive a Dodge truck. I drive a pickup truck.
Okay.
There we go.
Even with
I
gas
swear,
prices, huh?
I got a pickup truck, but that's what I drive.
Fair enough. All right.
There's no. Be clear. People are going to say, "Oh, he didn't answer the question." No, I don't have a Lamborghini.
He's a Dodge guy.
He's a Dodge guy. Okay, we like it.
I
American
love,
made.
love me a Dodge pickup, man.
American made. All
So
right.
he did dodge the question, technically.
Oh, there you go. Now, Mance, this is more of a general question, right? Not necessarily related to Hedera, and obviously with your expertise in the space. What kind of impact do you think a recession will have on the crypto markets in reference to not just price, but overall adoption? Do you think it'll speed it up, actually? Do you think it'll slow it down? Or what are your thoughts, moving forward, if we do get into a deeper recession?
Well, the speeding it up versus slowing it down, it's a hard question to answer, right? Because you can see good things happening even today. There is no shortage of money for projects that are moving into this space, right? There's a lot of money that's already been raised and is continuing to be raised that's being invested in quality projects. So I don't see the crypto winter really being negative in that regard. The flip side is, I guess, in line with that is that this is a good time to be building, right? You have the opportunity to sort of take a breather in some sense and focus on productization, adding features, building out the solutions that are going to be the solutions that in turn in the next bull market capture that market share. And if you're in the middle of a bull market, it's really difficult to spend that time retiring technical debt and hardening the system and doing all the things that you really do need to be doing so that when the next bull market comes, you're ready to capture that share. So it's a mixed bag. It has some good elements, it has some bad elements. What I'm not worried about is the industry just going into total collapse. There's too much already that's done today to worry about the industry as a whole going away because there's this terrible recession. And it's also good from another perspective. And this is interesting. If you look back into around year 2000, when the Web 1.0 bubble burst and it led us into Web 2.0, what happened were a bunch of projects died. And they needed to die, needed to go away. So we're seeing something like that happen now. What's interesting about crypto is that nearly all of the projects of any consequence are public projects, meaning that there's access to public liquidity. That didn't exist back in Web 1.0, right? If pets.com ran out of money, then they ran out of money. There was no VC that was going to go in after, throwing good money after bad. We have that today. We have good money being thrown after bad money. But so I think there's a long tail on a bunch of these bad projects that ultimately do need to die and go away. And because they have access to the money, it's going to take longer for them to do so. So an extended down market actually helps to clean the field of those projects that need to go away. That you could say is a silver lining of the environment we're in.
Well, one last question. You referenced Web 1.0, Web 2.0. Obviously, you guys have a vision on Web 3.0 when it comes to Hedera. Do you think that we're gonna, if you have this cleansing of projects that are going to go under and through the ashes come Web 3.0, what do you think Web 3.0 will look like? Because there's so many different opinions. There's no general consensus on even what Web 3.0 is. You do have talks of it being decentralized or partially decentralized, or it being integrated with blockchain. Like, what do you think the landscape of internet and how we consume content and media and how we get our information? What does that look like through the eyes of the Hedera platform, say 10 years from now, when you've grown, got more partnerships, and some of the things that you're looking for on the roadmap has already been built out?
So I don't think that Web 2.0 goes away. I think that Web 3.0, you could even say it's true for Web 1.0 as well. Each one of them sort of create a layer that is used as a foundation, the next layer up. In Web 1.0, we effectively had digital billboards. We had websites that would give you information, and that was it. And Web 2.0, we made it possible for users to interact and create content in a way with those central servers that would be represented on these billboards. So it was billboards, it's both read and write, if we want to think of it that way in terms of database technology. You could both read and write to the database. Web 3.0, in my opinion, is designed by decentralized ownership and decentralized control. And so in Web 2.0, the people that were using these centralized platforms often were contributing content to those platforms, and those platforms would monetize that content, and those that contributed the content didn't get to participate financially in that at all, let alone make decisions about the governance of this tool that they're interfacing with. Call it Twitter, for example, right? And in Web 3.0, fundamentally changes that model. And so it's still the case that we are going to have Web 2.0. I think that there are Web 3.0 native applications that are being built that look fundamentally different than anything that's in Web 2.0. DeFi is a great example of it. And then there are the Web 2.0 platforms that are going to migrate over time. And that may simply be, figuring out good UI, user interface elements to taking their Web 2.0 tech and sort of tiptoeing into a Web 3.0 context. Perhaps, again, it's retail. And those that are buying sneakers, for example, are interfacing with the company that's manufacturing those sneakers in a fundamentally different way and getting rewards in a way that they hadn't before. It's a relationship that exists as a function of this Web 3.0 technology that couldn't exist before. But definitionally, those that are contributing value get to participate in that value creation in a way they couldn't in Web 2.0, and often they're helping to influence the policies and the direction of those platforms that they're interfacing with in sort of a governance kind of context or fashion. Those two things together are how I personally characterize the value prop of Web 3.0.
And I think UI is so important because what we have now is pretty clunky and not very user-friendly. So I think you hit the nail on the head. Mance, before we let you go, there's one question I ask every guest on this channel, and you can see everyone shaking their head. What are your thoughts on a good barbecue chicken pizza? Are you a fan or not?
Barbecue chicken. Well, I'm from Texas, and so we have pretty good barbecue.
It doesn't belong on pizza, though.
Right, you had the pizza beef. Maybe I'm ashamed to say I don't know if I've ever had barbecue chicken.
What? Man.
I've had both. Put them together. I'm not sure I've ever had it.
We were in Atlanta, and we were stopped at this pizza place, and we all got our own pizza. It was me, Robin, and our business partner Rocco. And I ordered a barbecue chicken pizza, and Rocco was like from Italy. Like, he was born and raised there. And when he saw the barbecue chicken pizza hit the table, have you ever seen the movie Casino where Joe Pesci, when he was getting ready to off someone, he had that look on his face? That is the exact look Rocco gave me when he saw the barbecue chicken pizza. So I make it a point to always ask.
It's been a debate, an argument.
Yeah, no
No,
one's
now
a
I
fan.
got,
Well,
I
when
gotta try it now.
if you ever come out to Vegas, let us know. We will take you to a good pizza place where they have barbecue chicken pizza. So.
Great.
Awesome, Mance. Thank you so much for your time. We truly appreciate it. We are excited about Hedera, where it's going, and we definitely look forward to bringing you back on in the future to talk about some of the great things you guys continue to do. So, again, on behalf of myself, Robin, Rocco, and Seth, thank you for your time. And
Big
enjoy the
fans,
rest.
man. Big
Yeah.
fans of the project.
And enjoy the rest of your day.
Thank you, guys. It's good being here.
Good. Thank you so much.
Thanks for
Take care.
visiting us.
All right. That was cool. How's that for a 4K sub channel? What's up? All right. Throw shade at my channel. All right.
I don't get that, guys. Here's the thing. It's not the size of the channel. It's the motion of the
Channel.
viewers. The motion of the
that's
audience.
good,
Come on,
bro.
now, right?
That's good.
Here's the thing, guys. Y'all are Sin City Crypto. Y'all are the crypto community, and I mean that's why you see so many of us when we're in town. We're like, why would we not stop by, right? Like, this is it's one love, right? One community,
That's right.
so to speak.
That's right. One love. All right. Great interview. Big shout out to Mance Harmon and the Hedera team again for helping us set that up. And so that was a great interview. All right. Make sure if you like that interview and you want more of these caliber of interviews, hit the like button. Also, if you're not subscribed, please subscribe. Please. All right. About 61% of Bitcoin holders are currently underwater as market stagnation persists. On-chain metrics show the majority of Bitcoin investors are underwater, putting further strain on an already tentative market dynamic. Investors who purchased Bitcoin at 17.6 or below represent only 25% of the token holders, with 14% buying between 17.6 and 22K. Meanwhile, a staggering 61% of token holders were underwater at the market bottom. I'll ask you first, Robin. Are you surprised?
Here's the thing: the amount of BTC holders, the average is gonna keep going up, and so through every cycle, next bear market. So the next time we go through our bull market and we go on the bear market on the backside, the threshold right there is gonna be a lot higher than it is now. It's just the natural flows of the market. And so right now, you said the average buy is at 17,000?
No. So only 25% of people bought the bottom.
Only 25% is
17.6, 14% is between 17.6 and 22.
So yeah, and you're just think about how many people rushed in to buy Bitcoin during the YouTube screen.
Oh,
yeah, thank you.
my apologies.
So yeah, think about how many people ran in to buy Bitcoin last cycle during the run up, and so the same thing's going to happen again. And so the cost average is going to go up next cycle, and it's just the natural flow of the market. So I don't look at it as a negative. I think it's just a natural flow of the markets. Unless is there a metric that I'm really not judging? What do you say there, Seth? Yeah. Do you think there's more to it, or do you think that's just how the market moves?
It's just how the market moves, man. And here's the thing: you can preach it every single day the way you guys do here, the way so many of us do on YouTube, and we can't save everybody. That's the fundamental problem with these markets, is that you're going to have people that represent the middle of the market that will do irrational things, right? They love to sell their weakness. They love to buy the strength, the very top of the market, and you can't fix retail mindset, unfortunately, no matter how much you might try. So yeah, to the credit of people who are like tuned into media like this right now, these are the people that are going to make it, because they were going to make it no matter what. They already had that mindset of, I want to look for either distressed assets or value purchase of these assets, and then if they are going to sell, right, sell the tops and sell that strength.
Hundreds of years of data and that we can look at from traditional finance, where people buy tops and sell bottoms. It's just the human psyche. So
I'm bullish on bottoms. We're done.
you're bullish on bottoms?
Yes. We are finito.
He likes big bottoms and he cannot lie.
Boots with the fur.
Ben
The
was
whole
in here,
club
he
was
would,
looking
be
at her.
shaking his bottom. He did that two shows in a row.
Guys, before we sign off, What do we got to do, Robin?
We open in the club?
125 is the number, right?
Yeah, we did get to 150. So, yeah.
The new number will be 150, though.
Yeah, okay. So, moving forward, 150 is the new number. That's the baseline.
And I purposely,
that's the Bitcoin average buy price.
we had a super chat, something about pepperonis. So if you missed the last time Mind Your Biz was on our show, he did take his shirt off. But I knew this was coming, so I asked Rocco to turn the AC up because he is literally right under the AC. I'm just kidding. Look at
Y'all
I'm binding his
misjudged
shirt.
me.
Oh,
snap.
Rocco.
This is
Is
Vegas.
it club
We're not
time?
at the pool.
Are we doing club time?
Roll the club.
Roll the
baby.
club. Let's go. It ain't a mind your biz visit without the pepperoni nipples. There it is.
You'll get me fun of so much for this when I get home.
This is the new people in here. Like, what is happening?
If you're curious as to what in the hell this show turned into, there's a few things we do great in Las Vegas. We do a great cryptocurrency show. We're very hospitable, and we are good at clubs. And so what we like to do here at Sin City Crypto, because we are an entertainment-focused channel,
And entertainment-focused capital of the world.
we like to celebrate milestones by opening up our club, doing a dance party, having some fun. And so, in all seriousness, guys, we are done today. Make sure to follow us on social media, Twitter, TikTok, Instagram. Where should they go? Discord. Community Ran Discord. Go join that. The link is pinned to the top of the chat. Also, what else? Help me out here, Rocco.
Merchandise?
Oh, merch store. Yes.
You can
If you
get
like
this,
Robin's shirt, you can buy that. You can also buy a David pillow. You can snuggle up with and sleep.
When I open the club t-shirt, how am I gonna make it?
Oh, that's a good idea, Rocco. Open the club
yeah,
t-shirt.
that'd be good.
That's a idea.
Club t-shirt. That'd be a good one.
Yeah, that's all we got, guys. Big shout out to Seth, Mind Your Biz. Go subscribe to his YouTube channel. The link is in the description of this video. And huge shout out to Mance Harmon and the whole Hedera team for helping
Shout
us set
out
that
to
up.
Ben as well.
Yeah.
We hung out with him the last 3 days. And
He's funny, dude.
man, just
He's funny.
really humble, a lot of knowledge, you know.
Wait till you see his circle videos. Oh, you were there for that, right?
Yes,
yeah,
I
that
was,
that was exciting.
Guys, Ben Armstrong, he's more than an on-screen personality. You got to meet him in person. to
He's
know
also
that
an off-screen person.
The character is real.
Yeah,
Right?
it is real.
It isn't a persona. It's not an act. That's really who the guy
Literally
is.
what he is. Also, if you're new to the chat and new to the channel, welcome to our family. We're going to have to call it a family. Make sure to come join us tomorrow, 10:30 a.m. Pacific Standard Time, and every day of the week. So with that being said, Rocco,
Yes, sir.
Finger Tornado, friends, family, friends of family, and family of friends. We thank you so much for joining us on this hump day and letting us help you get through your week. On behalf of myself, Robin, the Don, and Mind Your Biz, we love you guys. Thank you so much for tuning in. We will see you tomorrow, 10:30 a.m. Peace.
Good show. Great show.
H Barbarian, I like that. Barbarian.
He does scoop up some more.
Yeah, H Bar. Crypto Whelp. Why does that sound familiar? Oh, where is who won?
It's like, gosh darn it, why did I do that before we pumped them?
Hey, who won the? Someone won the thing. Are they in here? Was that Coin Father or
Father, yeah.
Coin Father? If you're here, please say hello, or join one of our streams, or email us at SinCityCrypto1. Let us know. We want to give you a prize. All right, love you guys. See you tomorrow. Gotta go find my laptop.
Jeez.
Yeah, we know we're live. We know.